The cost of living in the United States has been a growing concern for millions of Americans, as rising expenses for essentials like housing, healthcare, food, transportation, and education outpace wage growth for many households. This phenomenon, often referred to as the cost of living crisis, has reshaped financial realities, strained budgets, and sparked widespread discussions about economic inequality, policy responses, and long-term sustainability. This analysis delves into the multifaceted drivers of the rising cost of living, its impacts on different demographics and regions, and potential strategies to mitigate its effects, drawing on recent data and trends as of 2025.1. Understanding the cost of living. The cost of living refers to the amount of money required to sustain a certain standard of living in a specific geographic area, covering essentials such as housing, food, transportation, healthcare, and other necessities. It is typically measured using indices like the Consumer Price Index, CPI, which tracks changes in the prices of a basket of goods and services over time. Unlike inflation, which measures the rate of price increases over a specific period, the cost of living reflects the cumulative effect of price changes on the affordability of a standard lifestyle. Since 2021, the cost of living in the U.S. has risen significantly, with estimates suggesting a 20% increase in the cost of basic expenses. This rise has been driven by a combination of global and domestic factors, including inflation, supply chain disruptions, and wage stagnation, which have collectively made it harder for many Americans to afford basic necessities. The impact is particularly pronounced for low- and middle-income households, often referred to as ALICE, asset-limited, income-constrained, employed, who face significant financial strain as their incomes fail to keep pace with rising costs. Key metrics and trends. Consumer Price Index, CPI. From February 2020 to April 2025, consumer prices in the U.S. increased by 23.6%, according to a Bankrate analysis of Bureau of Labor Statistics, BLS, data. While inflation rates have moderated from a 40-year high of 9.1% in June 2022 to 2.3% in April 2025, actual prices remain elevated and are unlikely to decrease significantly without a major economic downturn. Regional variations. The cost of living varies widely across the U.S. For example, Hawaii has the highest cost of living index at 192.7, nearly twice the national average, while Mississippi has the lowest at 83. 1. Household budgets. A 2021 report by the Council of Economic Advisors noted that 80% of American families saw their budgets for necessities like housing and healthcare increase by more than 7 percentage points between 1984 and 2014, crowding out spending on leisure, education, and savings. 2. Key drivers of the rising cost of living. The rising cost of living in the U.S. is a complex issue driven by multiple interconnected factors. Below, we explore the primary contributors, supported by recent data and insights. 2.1 Inflation and economic policy. Inflation, the sustained increase in the price of goods and services, is a primary driver of the rising cost of living. While inflation has cooled from its peak of 9.1% in June 2022 to 2.3% in April 2025, the cumulative effect of price increases over recent years has left many goods and services significantly more expensive. The Federal Reserve's monetary policy, including raising interest rates to a range of 4.25 to 4.5% by 2025, has aimed to curb inflation but has also increased borrowing costs, affecting mortgages, car loans, and credit card debt. Pandemic-related disruptions. The COVID-19 pandemic triggered supply chain bottlenecks and increased demand for goods, driving up prices. For example, transportation and energy costs saw sharp increases due to supply chain issues and volatility in global oil markets. Federal stimulus. Aggressive stimulus measures during the pandemic injected significant liquidity into the economy, contributing to inflationary pressures. While these measures supported recovery, they also increased the money supply, leading to higher prices. 2.2 Housing costs. Housing is one of the largest and most significant expenses for American households, accounting for roughly a third of the CPI. The cost of both homeownership and renting has surged in recent years, making housing a central driver of the cost of living crisis. Homeownership. The average price of a new home sold in the U.S. reached $511,100 in 2023, a significant increase from previous decades. According to Redfin, a household earning the median U.S. income of $83,782 in 2024 would need to spend 41.8% of their income to afford a median-priced home, far exceeding the recommended 30% threshold. To keep housing costs below 30% of income, a household would need to earn at least $116,782 annually. Rent has risen 28% since the start of the pandemic, with the rent of primary residence increasing by 4% in the year ending April 2025. High demand, limited housing supply, and post-pandemic market dynamics have driven these increases, particularly in metropolitan areas like Tampa, Miami, and Atlanta, where housing costs have risen faster than the national average. Regional disparities. Housing affordability varies significantly by region. For example, in California, mortgage payments consume 68% of median income in Los Angeles and 60% in San Diego, making these among the least affordable markets in the country. 2.3 Healthcare cost. Healthcare is another major contributor to the rising cost of living, with costs rising faster than inflation for many years. From 2001 to 2023, healthcare costs surged, doubling the cost of achieving a basic level of economic security for many. Households. Insurance premiums. The cost of health insurance has increased steadily, with premiums averaging $2,258 for home insurance alone in February 2025, reflecting broader trends in insurance costs. Out-of-pocket expenses. Even insured Americans face high out-of-pocket costs for medical care, including copays, deductibles, and prescription drugs. The CPIE, an experimental index for Americans aged 62 and older, places higher weight on medical costs, reflecting their disproportionate impact on seniors. Impact on budgets. Rising healthcare costs have forced many households to allocate a larger share of their budgets to medical expenses, reducing funds available for other necessities or savings. 2.4 Food and grocery costs. Food prices have been a significant concern, with a 30.6% increase in the UK from May 2021 to May 2024 serving as a comparable benchmark for global trends, including in the US. In the US, grocery prices have risen sharply since the pandemic, with a 155% increase in grocery costs from 2005 to 2025. Specific increases. Egg prices, for example, have been notably volatile, rising 10% in April 2022 alone. Dairy products saw a 2.5% monthly increase in April 2022, the largest since July 2007. Consumer behavior. In response to rising food costs, 53% of Americans have reduced grocery spending, and 47% are dining out less, according to a 2024 survey. Strategies like meal planning, buying in bulk, and opting for store brands have become more common as households seek to manage expenses. 2.5 Transportation costs. Transportation costs, including car ownership and public transit, have also risen significantly. The CPI reported an 8% increase in transportation services in 2024, with full coverage car insurance costs rising 12% between 2024 and 2025. Fuel prices. Gasoline prices, while not rising as rapidly as during the 2022 peak, remain a significant expense. Global oil price fluctuations and supply chain disruptions have kept fuel costs elevated. Vehicle costs. The cost of new and used vehicles has increased due to supply chain issues, particularly in the semiconductor industry, which has limited car production. Used car prices rose by at least 30% in 16 of 23 major metro areas from 2020 to February 6, 2024. Education costs. Education, particularly higher education, has seen dramatic cost increases, further straining household budgets. From 2005 to 2025, education costs rose by 58%, and the cost of attending an in-state public university surged by 122% from 2001 to 2023. Student debt. Millennials, in particular, have been burdened by student loan debt, which limits their ability to save for major purchases like homes. This debt, combined with rising tuition costs, has made education a significant barrier to financial mobility. Impact on young adults. The high cost of education has delayed life milestones such as homeownership and starting a family, contributing to a sense that the American dream is increasingly out of reach. 2.7 Wage stagnation. While costs have risen, wage growth has not kept pace for many Americans, exacerbating the cost of living crisis. From 2001 to 2023, median earnings for the bottom 60% of income earners fell 4% when adjusted for inflation, while the top 40% saw faster income growth. A 2017 Harvard Business Review report noted that hourly inflation-adjusted wages have grown only 0.2% per year since the 1970s. Survey data. A 2023 Bank of America survey found that 67% of employees feel that the cost of living is outpacing wage growth, up from 58% in 2022. Disparities. Women and minority groups face additional challenges, with 39% of women surveyed reporting the need for additional employment to keep up with costs, compared to 17% of men. 3. Impacts of the rising cost of living. The rising cost of living has far-reaching effects on individuals, families, and the broader economy. Below, we examine its impacts across various dimensions. 3. 1. Financial strain and economic insecurity. The gap between rising costs and stagnant wages has led to widespread financial strain. A 2025 analysis by the Ludwig Institute found that the bottom 60% of U.S. households do not earn enough to afford a minimal quality of life, with housing and healthcare costs being the primary drivers. Savings and debt. High costs have made it difficult for households to save for emergencies or retirement. Many are taking on additional debt, with credit card balances and auto loans rising as families try to bridge the gap. Mental health. Financial stress is taking a toll on mental health, with individuals like Allison Powell, a California resident, reporting full-on panic attacks due to worries about affording a home. 3.2 Housing affordability and the American dream. The dream of homeownership, a cornerstone of the American dream, is increasingly unattainable for many. High home prices, elevated mortgage rates, nearly 7% in 2024. And rising property taxes have made homeownership a significant challenge. Case studies. Stories like that of Rachel Gambino and Garrett Mazzio, who struggle to manage a $3,400 monthly mortgage payment, highlight the burden of housing costs on young families. Similarly, Hannah, a refugee in the U.S., expressed doubt about ever affording a home due to high interest rates and down payment costs. Renters' challenges. Renters face similar pressures, with many unable to save for a down payment due to high monthly rents. This has led to a growing sense of economic immobility, particularly among younger generations. 3.3 Regional disparities. The cost of living varies significantly across the U.S., creating stark differences in affordability. States like California, New York, and Hawaii are among the most expensive, while states like Mississippi, Oklahoma, and Arkansas offer lower costs but often fewer economic opportunities. Metropolitan areas. Cities like Tampa, Miami, and Atlanta have seen faster-than-average price increases since 2020, driven largely by housing costs. 3.4 Impact on specific demographics. Low and middle-income households. ALICE households, which make up a significant portion of the population, are particularly vulnerable. These households are employed but struggle to afford basics, often living paycheck to paycheck. Seniors, Social Security recipients received a 3.2% cost of living adjustment, COLA, in 2024, down from 8.7% in 2023, but many still struggle to cover high costs in states like California. Young adults and millennials, burdened by student debt and high housing costs, younger generations are delaying major life decisions, contributing to a sense of economic stagnation. 4. Sector-specific cost increases. To understand the rising cost of living, it's essential to examine specific sectors where costs have increased the most. Below are detailed breakdowns of key areas. 4.1 Housing. Home prices. The average home price has risen dramatically, with new homes costing $511,100 in 2023. Home sales in 2023 fell to their lowest level in nearly 3 decades due to high prices and mortgage rates. Rent increases have outpaced inflation, with a 28% rise since 2020. In high-demand areas like Tampa, rent and owner's equivalent rent rose by 46.9% and 44.6%, respectively, from 2020 to 2024. Insurance and taxes. Home insurance premiums averaged $2,258 in February 2025, and rising property taxes due to increased home equity have added to the burden for homeowners. 4.2 Healthcare cost surge. Healthcare costs doubled from 2001 to 2023, with significant increases in insurance premiums, hospital services, and prescription drugs. Disparities. Older Americans face higher medical costs, as reflected in the CPIE, which weights healthcare more heavily. 4.3 Food grocery prices. Groceries have risen 155% from 2005 to 2025, with specific items like eggs and dairy seeing sharp spikes. Dining out. High food costs have led 47% of Americans to reduce restaurant spending, impacting local businesses and the hospitality sector. 4.4 Transportation vehicle costs. New and used vehicle prices have risen due to supply chain disruptions, with used cars up 30% or more in many metro areas. Insurance. Car insurance costs rose 12% between 2024 and 2025, contributing 8% to overall inflation. 4.5 Education tuition increases. College tuition costs rose 58% from 2005 to 2025, and public university costs surged 122% from 2001 to 2023. Long-term impact. High education costs have led to a student debt crisis, with millennials particularly affected, limiting their ability to achieve financial milestones. 5. Policy responses and mitigation strategies. Addressing the rising cost of living requires a multifaceted approach involving government policies, community initiatives, and individual strategies. Below are some key responses and recommendations. 5.1 Government policies. Monetary policy. The Federal Reserve's efforts to control inflation through interest rate hikes have had mixed results, reducing inflation but increasing borrowing costs. Further rate adjustments may be needed to balance affordability and economic growth. Housing initiatives. Policies to increase housing supply, such as zoning reforms and incentives for affordable housing development, could help alleviate pressure on home prices and rents. Social Security and COLA. The 2025 Social Security COLA is set at 2.5%, reflecting lower inflation but still insufficient for many retirees in high-cost states. Expanding benefits or adjusting the COLA formula could provide more relief. 5. 2. Community and nonprofit support. Cash assistance. Organizations like the International Rescue Committee provide emergency cash assistance to help families afford necessities, a model that could be expanded in the U.S. Financial education. Programs offering budgeting tools and financial planning resources can help households manage rising costs more effectively. 5.3 Individual strategies. Budgeting and cost-cutting. Households can reduce expenses by meal planning, buying in bulk, using public transportation, and downsizing housing. Relocation. Moving to lower-cost states like Mississippi or Oklahoma can reduce expenses, though it requires weighing trade-offs in job opportunities and quality of life. Supplemental income. Many Americans, particularly women, are seeking additional employment to offset rising costs. 6. Regional case studies. To illustrate the varied impact of the rising cost of living, we examined 3 regions with distinct economic profiles. 6.1 California. A high-cost epicenter. California, particularly cities like Los Angeles and San Francisco, is among the most expensive places to live in the U.S. Housing costs consume a disproportionate share of income, with mortgage payments accounting for 68% of median income in Los Angeles. High taxes, healthcare costs, and transportation expenses further exacerbate the cost of living, making it difficult for middle-class families to thrive. 6.2 Mississippi, the most affordable state with a cost of living index of 83.1, Mississippi is the least expensive state in the U.S. Lower housing and transportation costs make it more affordable, but limited access to high-paying jobs and quality services can offset these benefits. For retirees or remote workers, Mississippi offers significant savings, but economic opportunities may be limited. 6.3 Tampa, Florida. A rising cost hotspot. Tampa has seen some of the fastest price increases since 2020, with housing costs, rent and owner's equivalent rent, rising by 46.9% and 44.6%, respectively. The influx of new residents and limited housing supply have driven these increases, making Tampa a microcosm of the broader housing affordability crisis. 7. Long-term implications and outlook. The rising cost of living has profound implications for the U.S. economy and society. Persistent high costs could widen inequality, reduce social mobility, and fuel political discontent. The 2024 presidential election highlighted the economy as a top voter concern, with 40% of swing state voters citing it as their primary issue. Economic inequality. The benefits of economic growth are increasingly concentrated among high earners, leaving low and middle-income households behind. Demographic shifts. High costs in urban areas may drive migration to more affordable regions, reshaping population dynamics and economic activity. Policy challenges. Balancing inflation control with affordability will require innovative policies, such as expanding affordable housing, reforming healthcare costs, and addressing student debt. 8. Conclusion. The rising cost of living in the United States is a multifaceted challenge driven by inflation, housing shortages, healthcare costs, and wage stagnation. Its impacts are felt across demographics and regions, with low and middle-income households, seniors, and young adults facing particular difficulties. While government policies, community initiatives, and individual strategies can mitigate some effects, addressing the root causes will require sustained effort and innovation. By understanding the drivers and impacts of this crisis, policymakers and individuals can work toward a more equitable and affordable future.